We also welcome on board Sonal Varma, MD and Chief Economist, India and Asia ex-Japan at Nomura, joining in on the show right now. Sonal, hi, good to have you on the show. Just been analyzing what Trump means for India. What's your own SWOT analysis as to what's going to be the economic bearing of it all?
On net, Aisha, it is negative for the world economy because we do think the first priority under Trump 2.0 is going to be implementation of higher tariffs, which means more US inflation, less rate cuts in the US next year, more trade policy uncertainty, slowdown in global growth, weaker exports. So we do think the net impact is going to be weaker growth across the board, but of course there are always winners versus losers within the global bloc.
The general belief is that deglobalization is actually bad. And that is what we've experienced. But if one, Sonal, looks at the experience of 2016 to 2020, when these tariff barriers were created, the US economy and the world economy did okay. It was not as bad as what we thought when initially the tariffs were imposed.
Well, we don't know the counterfactual, right? So I think it's very hard to say whether it was good. What we did see was, this entire move towards de-risking supply chains from China. And that did benefit countries like India, Mexico, Vietnam. But then these shifts in supply chain, it is a costly affair for firms, and these are not based on primarily cost metrics, but more in terms of more other strategic imperatives. So typically that tends to be negative from productivity and cost perspective. We've also seen a lot of geoeconomic fragmentation in terms of how trade and investment has moved actually in the last 4 to 8 years, which again has led to a moderation in global foreign direct investment inflows. India, of course, in all of this has been a big beneficiary. And when we analyze the impact of Trump 2.0, we do think India stands out as one of the big beneficiaries compared to other countries in Asia, like China, South Korea, Taiwan, which are more sort of negatively impacted. But on net, I would think it is, deglobalization, I think, does have negative effects at a global level.
Bad for the world will be bad for US, which is because it's world's largest economy. So is it fair to assume that the strength what the dollar is exhibiting and the kind of changes what we've seen in the US equity market on hopes that the Trump regime would be better, that actually would be challenged? Because if your view is that the trade tariffs will slow down the world, then the biggest casualty could be US itself.
I think on net, actually, we have lowered our growth projections for the US. So the economic impact on US is sort of more stagflationary. Unlike Trump 1.0, this time it's a 60% on China and potentially 10 to 20% across the board. So the inflationary impulse from this round of tariff increases, if it is implemented, is going to be quite significant. US economics team estimates US inflation in 2025 could be around 0.8 percentage points higher as a result of these higher tariffs. Which in turn will mean lower personal consumption demand because of higher inflation, and also more trade policy and business uncertainty, which is also going to weigh on business investment in US next year. So there is a marginal negative impact on growth. We estimate around 0.2 percentage points for US, but a bigger impact on inflation, which is the reason why we've changed our Fed call. So we still expect a rate cut, today and one more in December. But for 2025, we now expect just one rate cut from the Fed in Q1. We were earlier expecting 4 cuts next year. So this is the US backdrop. Now, US imposing tariffs on Europe is also going to be negative for growth in both Euro area as well as UK. It hurts exports in China, hurts a lot of the open economies in Asia as well. So yes, I mean, to your question, I think the net direction of change for growth is lower, for inflation is higher, and therefore to that extent would have an adverse impact.
Uh, Sonal, you mentioned this point that what Trump does could actually benefit India. What's the thinking behind this thought? Is it because of more business will move from China to India? Do you think the tariffs would be stronger against China, less against India? What is the thinking behind it?
Sure. So I think, first of all, everybody loses, right? So I think if you're talking about weaker global demand, then, India will also see a moderation in exports. And this is not about, whether there is tariff put on specific products in India. The bigger question here is if we have weaker world demand and weaker global trade, then there will be an across-the-board impact on export demand with or without tariffs. And I think that's a bigger issue because typically weaker exports also translate into weaker investment. So from a growth perspective, India also will be negatively impacted. But when we compare the impact that India sees vis-a-vis the impact some of the other countries in the world see, we think on a relative basis it's better off. It's more domestic demand driven. It's also dependent on imported oil. So if under Trump there is a bigger focus on more fossil fuel production and oil prices cool down, that can be a positive for India. And we're thinking also more sort of from a medium-term perspective. The 60% tariffs on China can lead to some amount of substitution to our other countries. India could partly benefit from that. And we have been seeing in the last 3 to 4 years the supply chain relocation. And the work we have done shows that India is already one of the big beneficiaries in Asia from the supply chain relocation in sectors like electronics, but also in semiconductor testing and assembly, autos, capital goods. So some of these sectors, but more broadly, the theme of supply chain relocation should benefit India. The final point I'd like to make is if you look at where India is getting these MNCs from, a lot of this is US companies setting up new factories in India. It's a lot of European companies or developed Asian countries like Japan. So the investment that India is attracting, I think, is a lot more resilient compared to what we are seeing in some other countries, let's say Mexico, where actually it's been a lot more China investment, which could come under scrutiny under Trump 2.0.
Makes sense. Sonal, great to have you on the show. Thank you so much for your time.
Thank you.
Okay, let's.
If you like this video, then like, share and subscribe to ET Now.